Hello, thank you for attending the session about landed cost in SAP Business One. My name is Marisa Molina. I'm part of the consultant team in Consensus International since 2007, so a few years already uh, with Consensus and with some of you, I guess that we've been working together. So again, thank you for attending the session. Basically, the reason that we decided to do this session is because we get a lot of questions regarding landed cost, how to apply those, what type of allocation to use, why did some P&L accounts were affected when I apply landed cost. So let's go and start with the definitions, okay? So these are the topics that we will go through. Basically, as I say, definitions, then the settings in SAP Business One, and finally a demo, transactions inside SAP Business One. Hopefully we will have the time for some questions, and better on, hopefully we will have the answers for those. But even if we don't have the answers, we will look for those and get back to you, okay? Let's go and start with the definitions. Landed cost, it is the additional cost that increase my inventory value at the time that from the time that I purchase the product from my supplier and I have it in my warehouse ready to be shipped. I'm not talking about production process, of course. So basically it is the product cost, right? Plus shipping, customs, risk, overhead. Usually in risk, a lot of people refer to this one as insurance, but actually no, it is risk because it involves more than insurance, compliance, quality, safety, stock cost. All of those are part of the risk concept. So there you have like the main things. Let me tell you, there are some customers that are included now as part of the landed cost, even the sales reps commission. That is not per se a landed cost, but I mean, it is up to your company. What are the landed costs? I mean, what are the additional expenses that you would like to add to your inventory and get the final value? As always, talk to your CPA, your financial officer, to make the final decision because it impacts your financial side hugely, right? Basically, when we are talking about landed cost, we have the product cost, and let's say it is $10. That is my purchase price from my supplier, $10. And then I start adding shipping, customs, all of this, or some of this. So at the end, my inventory value could be $15. My sales price is going to be $20. So basically my margin would be 5, right? The 20 minus the 15, I will have my margin in 5. If you don't apply landed cost, you don't have visibility over the real margin, the real profit margin for your products. Because if I'm talking about only the product cost, I would say that my margin is going to be $10, right? Product cost 10, and I'm selling in 20, so I would say, okay, my margin is going to be 10. It is not true. So the main reason that companies are applying landed cost is to really have on books and to have visibility about this, what is the real sales price that I should have, that I should define, what is my markup. It is applying landed cost. In the past, most of the landed costs were used like expenses. So basically, if I'm buying products today and we are in, I don't know, any month, let's say September, October, any month. So I'm buying the product, let's say in September. And then but my sales process is going to take effect actually in October or November, and I receive all of the bills from my landed cost in September. So I'm applying everything, booking everything as an expense, affecting my P&L for all of those expenses in September. But actually my revenue for those products is going to be affected in October or November. So my P&L is not a real P&L based on my sales. So what I'm doing is that I receive the products in September, I apply my landed cost, my inventory value is reevaluated, it is a real value now, and I'm affecting my P&L just at the time that I ship and sell my product. So if I'm selling in October I will be affecting my revenue and my cost of sales. So now it makes sense. So I will have in the same month, I will have the revenue and the real cost of my products. That is the reason that is one of the reasons actually that we should be using landed cost, right? So basically those are like the definitions, what are the type of landed cost that you can use. And now what are the allocation type? So based on the type of products that your company has, then you make the decision. Are you allocating the landed cost based on any of these concepts? It could be quantity, weight, volume, cash value before or after customs, or equally. So how do you make a decision? Again, talk to the financial officer, talk to your CPA. I mean, you need to know what is the best way to do it. But just to give you an idea, there's a huge difference if I'm buying cell phones. The weight and the value, the weight and the volume is low, right? But the cash value is high. Let's say the cash value and maybe the insurance, it is huge. So in that case, I would use the cash value instead of weight or volume. But if I'm buying furniture, let's say, in that case, weight and or volume makes more sense. So that is critical for you to make that decision. If your company are not using landed cost at this time, most of the company, what they do at the beginning is they do it based on the quantity, because it is easier to identify. And then after 2 or 3 months, they analyze the numbers and then they make the decision. You know what? No, it makes sense to do it by weight or by volume. Equal, it is one that we don't use it. I haven't seen it actually, because equal, it means that if you have in your, I don't know, in a document, I don't know, 3 items, then it's going to be split in 3. It doesn't matter what is the quantity, weight, any of those. So I guess that equal is not that a common landed type of allocation. But for the others, we will use a few of these in demo in SAP, so you can look at how SAP actually calculates landed cost based on this type of allocations. So let's go and check those transactions in SAP, and I will give you some of the formulas so it's more visible for you what actually is happening behind the scenes. Let's go and review the settings for landed costs in SAP Business One. I will share with you the definitions in one slide, so then we can go to SAP and review those settings inside SAP. Okay, so let's go. And so basically these are the settings that we need to set up. First is the unit of measure. So in administration, the first settings are always under the administration setup. Okay, so administration setup inventory. So in there, it is the unit of measure. You will see the length and width, and that is needed for the volume, and also the weight. Okay, so we will review those. Then customs groups, also under administration setup and inventory. Then the default unit of measure. So it is in administration, system initialization, general settings, and the display. Why? Because in there we have where are the default, most of the time it is inches and pounds or ounces. And where are how many decimals are you using? Because sometimes if you have items that with, I don't know, like maybe the volume is very, very low, very small items, maybe you need 3, 4, 5, even 6 decimals. So those decimals need to be defined under the general settings. Okay. Then also under the administration setup, we have the actual landed cost under the purchasing. Actually, it is the only setup that we have for purchasing. It is landed costs. And finally, based on the previous definitions, then we will go to the actual item master data and define that the item must be an inventory and purchase item, of course. And under the purchasing tab, we will find the purchasing dimensions, basically for length, width, weight, that and the first two plus the height define the volume and the customs group. Okay, so let's go and then review these settings directly in SAP. Now we are in SAP Business One. Let's go and review the settings. So you can just go directly to modules here, or you can go to the main menu. So let's go to under administration. The first one, if you remember, it was the unit of measure. So administration, setup, under inventory. Let me just go a little down here. And in there, you will have the unit length and width. So this is the first one, and the other one, that's going to be the weight. So let me just put one next to the other one. And as you can notice, for the length and width, what we have is millimeters. That is the unit, right? So the other dimensions are based on this unit that is millimeters. And for the weight is milligrams. That is the unit, milligrams. So the others are based, the formulas, the conversion is based on the milligrams. Just keep in mind, SAP is a German company. So in Europe, they use the metric system, and that is the reason that these are the dimensions that are like the unit for the weight and length, width, and actually the height for the volume as well. So these are like the dimension, the units, right, for the dimensions. What is the other one that we need? Here you have it just below, it is the customs groups. In this case, we don't have any custom group in here, but basically you can just add in here, and remember there is like the tariff code. It is for the international tariffs for these goods, and there is a tariff based on the type of good, right? So what is the source, what is the origin, what is made of, all of those things. So usually it is something like numbers like this one. So basically it is like this one. So you can have those, you could say, okay, you know what, the customs is going to be a 5, it is a percentage, right? It's going to be 5%, and maybe for purchasing it could be, I don't know, 0.6, and other it could be 0.2. So at the end, the total percentage is going to be this one, right? So that is basically what you can just define. And in here, just what's going to be the actual allocation for customs. So this is for customs. What is the other thing that we need to take into account for the settings for the landed cost? Those three were on the setup. Now the other one is for the system initialization. So in the system initialization, now that we were talking about the units, then we go to the general settings. And under general settings, here under the display, right here. So here we have what is the default length and weight unit of measure. In this case, there you have these two, right? And the other thing that I mentioned before, it is the decimal places. So for units, these units refers to those dimensions, decimal places. And so remember, decimal places, you can increase at any time after you have your first transaction, you can do it, but you cannot decrease it, okay? So just be very careful with this one. You can increase decimal places anytime, you cannot decrease decimal places. So this is the other thing that we need to consider for the landed cost. And finally, also under the setup, the other three were under the inventory, but now we need to go to the purchasing. And actually it is the landed cost, right? So one thing, if you don't remember what is it, you can use the lookup menu. So you can say, okay, landed, and you will find these two. One under the setup, landed cost, and the other one for the actual transactions under the purchasing module. Okay, let's go and remove it. So here we have the landed cost setup. So the code is only 2 characters. In this case, it's like a text, right? Because it's 0, 1, 2, or 3. You could use alphanumeric as well, like a Persian phrase. You could use this one as well. It is only 2 characters. The name, same thing, just you have 30 characters, you say in the bottom left. that we have 30 characters. But it is in here that you define what is going to be the type of allocation. Those are the list of allocations that we review in the definitions for the landed cost, right? And finally, what is the allocation account? In here, I have for this four that we have, I have 3 accounts. It is the same thing, 2360. But for the shipping, I selected a different account. And the reason is that usually shipping, it is the highest cost. It is ocean freight, inland freight. So sometimes it is more difficult. If you have everything under one single GL account, it is more difficult just to keep track of the bills from your vendors. Because at the end, this is the account that you will be using for your vendors' bills for those landed costs. So if you use, there are companies that they use, actually, they select one different account by concept. Yes, that can be done. You could use one single GL account for all of them. In this case, I use a different account for the shipping. So if I go to my SAP account, let me just put it in here. So here you see the two that I have, 2360, 0. And in this case, 2360, 10, right? So accrual landed cost, accrual shipping landed cost. Now that we are here, the reason that this one is in green, it is because it is defining the GL account determination, okay? But other than that, we are fine. Okay. So now that we have the GL accounts, then we can just review what are the other settings that we have. Let me just close this one. And basically, the only thing that we are missing is the actual item. So let's go to the item master. Let me just go to one of the items that we will use for the transactions. This is a printer. Remember, this is the OEC computers. All of you should have the OEC computers database with a lot of data. That is the one that it comes whenever we install SAP Business One. So the item must be an inventory item, and it must be, of course, a purchasing item. Remember, this setting for purchasing and sales can be changed anytime. The inventory, once you have a transaction, you cannot change it. Okay, that is, if you have a transaction, it is an irreversible thing. And here under the purchasing data, it is in here that we have the dimensions, right? So basically you can have anything. Let's say that here we have one. You know what? 500. And then customs group, customs exempt. Right now we have it exempt. I already showed you this table. I'm not using it today. And then we just update. So basically, this is the volume, and this is the weight. In here, I could say, you know what, it's going to be 12 pounds. And I did it. That's it. Okay, so basically, these are the settings that we have for using landed cost. Okay, now that we went through the settings for the landed cost, let's go and review the transactions. So let's go to the menu. This is under the purchasing menu. We will find the landed cost. Let's go and open it. I will close the main menu just to have here. So what we are applying the landed cost. So the first thing is, what is the goods receipt PO that I will be using to apply my landed cost? So let me just open the last goods receipt PO that I have. So we will use this 1309. You see that the goods receipt PO is already closed, but it is closed because I already have the AP invoice for this one, right? But it doesn't prevent me to apply landed cost. So that is one of the things that I want to bring to your attention. Actually, here under data, you will have advanced, and if I don't want to apply a landed cost for this goods receipt PO, I can just close for landed cost, then it won't be available to apply landed cost. Right now I want it, so let's keep it as it is, 1309. and I will select my vendor. In this case, I will do it by name. So there I have it, and then I will go to copy from, and as you can see, it could be over the goods receipt PO, AP invoice, or landed cost. Landed cost, you can apply a landed cost over another landed cost, just in case that you need to adjust that one, the original one, right? So let's go and do based on the goods receipt PO for this vendor, and then it would be this one, 1309. You can see that the 1308, it is not available for this vendor, and I know that it is for the same vendor. So here is my landed cost. Total amount 25,000, the same as the goods receipt PO. So in here we have quantity, the volume, the total volume, base document price, it is the price from the actual purchase order, from the actual goods receipt PO, and the base document value, the total, right? So let's go and start with how to apply it. So in this case, let's start with the cash value before customs. For me, this is the easiest. So we will use the same amount for the three of them. We will use it, do it for the cash value, quantity, and volume, right? So you can see the difference. In this case, do you see that the factor, it is 4. It is 4%. This 1,000, it is the 4% over the 25,000. So basically, that is the one that we need to understand how the system does it for the cash. So basically, the 4% over the base document price, the 400, there you have it. It's $16. The 4% over the 300, and the 4% over the 500. And then in the allocation cost value, it will be times quantity, so times 10, times 20, times 30. So there you have how the system applies this 1,000 if it is based on the cash value. And it makes sense when you are dealing with items with very high value, like let's say some electronics, small electronics, like a cell phone, let's say. In that case, it would make sense just to do it based on the cash value, right? So that is one of the way that you can do it. And as I'm saying, it is the easiest for me. Let's go and put it in 0, and let's go for the quantity. So let's go for the quantity. The factor is the same one, but we are not using the factor in this case. So when we are talking about the quantity, you see that the expenditure now, it is exactly the same between among the three items, right? Because it's based on the quantity. So in this case, what I'm doing, it is I have 1,000 split for the 60, that is the total quantity. Now, in this case, that 60 was an easy one, right? 30, 20, and 10. But if you have a lot of lines, different quantities, you can go to the goods receipt PO and use the icon for the volume and weight calculation. So this way you see that my total quantity is 60, and actually my volume that we will use next is 6,500. So let's go and have these numbers someplace here in my document, so we can just look. I double click and open my remarks here. Remember that we have a lot of characters in here. So my total quantity is 60, and my total volume is 6,500. So for the quantity, how do we do it? How does the system does it? So basically, the only thing that I need to do is that 1,000 divided for the 60. That is the total quantity, and that is actually 16. So the system that rounding to the 2 decimals, so that is the reason that it is 1667. So that's how the system does it for the by quantity. Okay, very easy as well. So let's go have this one here, and then of course the total, it is times the quantity. So this is the other one. Let's go now to the actual volume. So with the volume, still the factor is still 4, but now you see different amounts by line, because it all depends on what is the volume of the item, right? So how do we calculate this one? So the first thing that we do, it is that it would be, what is the volume by item, right? So I would say, okay, what is the amount that I want to split? So that would be my 1,000, right? And then what is the prorated volume. So basically it would be 100 divided by the 1600. So basically that's what I will have in here, and that amount it is 38. So actually it is with this one. That is the reason that in top you see that what we have in here is 1539. It is because it is this. This is the amount, right? And then I would do quantity, and the quantity for me is 10. So basically that is the reason that I have those 153 with 85. So in this case, basically what we will have is, this is the 100 divided for the 1600, then for the 1000 it would be the 39, I'm sorry, and then I could just do all of this, then times the quantity, that is 10, and then I will have those allocations accounts the right number. So basically this 1539, it is 100 divided for the 1600 times 1000. So basically that's your calculation, and it's going to be the same thing for the other, right? So basically I will have the 1000, then it will be the volume for the second one, and in this case that's going to be 0.37, and then times the 1000. So basically that's what I have, this, the second amount, 3077. So basically that is the second one, and of course for the other one, and let me just copy this expression. So we will do it here and then just change the volume for the last one, and it is 50. So in this case, that is the 00769 basically times 1000, and then this times the quantity. So each one is $7.69, and then times the quantity, that is 30. So there you have the split, how the system does it, right? So of course this one, for the volume or weight, it requires additional steps, but the system takes care of this one. You don't need to do it. I mean, it is just to show you how the system works with this one, right? So basically what I'm saying is that if I'm using only the volume, the original purchase price, it was for the first item 400, and now adding my 1539 is going to be 415 with 39, right? So if I go here and I apply the same for all of them, at the end I'm adding this cost to my original inventory value, my item. So in my inventory at the end, what I will have is 480.52 for this item, and we will see in the item master, we can just check what's going to happen with this one. Now what else do we have here? Before adding the document, I could say, you know what, I'm getting the bills from the same vendor. I have a broker that, it is the broker that actually send me the bill for all of these concepts. If that is the case, you could just select from here the broker, and let's say that is going to be Far East Import. So you would be able to create the AP, the bill, right, for this broker for these concepts. So I will just keep it in as it is, and we will see in a while. So basically you can use the reference and the file number to enter the, let's say, container number, the vessel, anything that for you it is relevant. In the vendors I will have, this is the vendor for my products. Under the details I have my new warehouse price, and in this case you can apply that one to a last purchase price. So you could select another price list. You could say, you know what, I want my base price to be to include my landed cost, because now I want to use my base price list and then use this one as the base price to for my regular sales price with a markup. But then at that time my sales price will be doing a much better job saying, okay, my sales price is going to be 25% over the base price that already has my import cost, right? So that you can do it in here. Here you have a field for the bill of lading if you want to, and under the general you will get the journal entry once we add the document, and in the attachment you can attach all of the documents for this landed cost. Okay, so what if you have more in the same container, you have products from some other vendor. In that case, you can bring that vendor here. Let me check if I have any other goods receipt PO with different vendors. Let me just go with a few here that I could have. This one, maybe. Yeah, let's go and do it this one. I don't know if I have this one, but let's say that this is the vendor. So this is what I can do. I can just bring the vendor here, and the system asks, do you want to delete the previously selected vendors? And I say no, I want to keep those. So basically, do you want to delete the expense table contents? No. And now I will just copy from my goods receipt for that vendor, and I will say this is the one. I will use the last one. Do you want to delete? No. No. So basically now I have the items from my first vendor and the other items for my second vendor. Okay, so that is the way that you can bring more than one goods receipt PO from different vendors into one single landed cost, right? So that is the reason that in the vendor code it is just it is hidden because you don't have it and the name is different vendors. Okay, so that you can do it. Okay, I won't do it. I will just close this one and open it again. So basically I don't want to lose the data that we already have for this one. Let me just go and do it pretty quickly. So basically it's going to be the ARME, copy from, goods receipt POs. Let me just bring that one. Yes, let's go to the costs and let's bring the 1000 for each of them. Let me bring a broker, customs no, and then let's go and add the document now. Yes, I want to add it. And let's go back here. Okay, so here under my general, I have my journal entry. So basically what I have is my inventory was revaluated with those 3,000 additional dollars. And I have the accounts, two different accounts, one for the shipping, because most of the time it is the one that has the higher value. And then the accrued landed cost for the others, the other two, by quantity and by cash, I guess. It is for this one. It was under the settings. So basically it is easier to reconcile later on. Okay, so that's what I have in the under the details. Here you have it. Costs and then the items, right? So here you have your landed cost. Now if I go to my goods receipt PO, let me just do a refresh, right? So if I go back to data, now it's telling me, do you want to open for landed cost? Maybe I want to apply more landed cost using this same goods receipt. Then I can do it, right? If not, it will be just already done. So, and there's a field that keeps that data, so you can just know what are the goods receipt PO that you already have landed cost for that one, right? So that's how we do it. Now we have the broker Far East imports. So, and this my landed cost is number 11. So if I want to enter my bills for that one, I can just go to my AP invoices. I select my vendor, Far East import, the dates, today, right? It's going to be a service document, and then I can say copy from landed costs. So it's going to be the 11. I'm bringing everything, finish. So basically what the system does is it brings the three concepts that I had, the 1000 that I had for each one, and with the GL accounts I define for those three. So you can use this one, but most of the time you have different suppliers. So in this case I would use it only for the one that is the highest value. So I would do it. If not, I can just come in here and say, you know what, no, this is only for the, I'm deleting this one, I'm deleting this row as well. Let's say that tax exempt, and then I will just go and add a view, and I add my bill. In this case, what I would do, I hear you, most of the time what we do is enter what is the bill from my vendor, right? By my suggestion, if you want to keep track of this one, you can just go and say, okay, register what is the landed cost. This is for landed cost 11, and then enter the bill from your vendor. So you keep that information here, right? So basically, let me just do the update. Having said that, now we need to reconcile, right? Because let's say that we already have the AP, the bill from one of our landed costs, but not for the others. So let's go and from the finance side, reconcile this one. So I can go to the chart of accounts, or I can just open it from here. So if I'm there it is. So I need to reconcile this one just to make sure that I'm getting all of the bills from my vendors. If not, I can keep track of them. So I'm just signing here, display and reconcile transactions only. So basically, this is what I have. I have my landed cost. This is the one that I have here for landed cost, right? So I have all of this. Show me everything. So I already have my, let me just increase the size of the column so you will see it. So I have my landed cost in line 8. That is the document 11, IF. The way that I remember that is a landed cost is inventory freight charges. That is the way that I remember that IF, it is landed cost. And this is the invoice. So basically what I did is this invoice, it was already, if I remove this and reconcile, you see that now I don't have the bill from my vendor, and I don't have the landed cost 11 because I did the AP based on the landed cost. So basically it is already reconciled. But let's say that I don't have for the others. So in this case, I will have just the others pending. So I will just wait. This was for the shipping, right? If I go to the other account, this one, I say everything. So in this case, I still have this one, the landed cost 11. I have my 2000. I still don't have the bills from my vendor. So as soon as I have them, I can just come in here and reconcile it. Okay, so if I do this display and reconcile, you see in the line 2 and 3, I have in the line 2 one landed cost. It is number 5. In the 3, I have a journal entry. It is landed cost 5. So I could reconcile this and say, okay, these two apply one to the other one, right? So basically that's how you could just make sure that we are applying all of the landed cost. Okay, so hopefully this gives you some ideas about how to work with landed cost, additional ideas at least, because I guess in the past we didn't mention how can you use a price list for landed cost, or maybe you didn't know how to apply landed cost for more than one vendor from in one single container. So that's how you can do it. If you use estimates, you can apply landed cost over this one. So let me just go very quickly. I'm saying, okay, you know what? I'm creating another landed cost over this one because maybe one of the amounts were wrong, or now I got the bill. So I will open another landed cost. I use my same vendor, copy from, in this case, landed cost, and I will use 11. So now it was 1,000 for each one, but now I got that maybe the cash, it wasn't 1,000, it was 1,250. And look at this one. I'm not removing the others. Those are still there. I'm not saying, no, I don't want to adjust by quantity or by volume, putting in 0. No, I only change and apply the right amount. And that is the only thing that I do. And then I add it. So you will see what is the difference, okay? So when I'm coming here and I go to my details, to my journal, look at the journal entry. So my inventory was revaluated with the 250 that I added, and of course the deal account for those accrued landed costs. So the system takes care of it, right? If we go to the actual items and we can check it in the inventory data, here we have whatever is in stock. So let's go to the inventory posting list so we can check it, the transactions. So at the bottom, in this line for the landed cost 11, you see that my inventory value for this item was 448.05. But now when I apply the landed cost 12, now it increased a little bit based on that landed cost. Okay, so this is the new one basically. So there you have it. It is that that's how you have your landed cost applied to this one. In this case, once you apply the document, you can say close document. I don't want this landed cost still open to apply landed cost over this 12. So I can just come here and say closed, and that's it. So thank you very much, and thank you for attending this session. Hopefully it will you will get more ideas about how to use landed cost. And let's go and check if you have some questions or comments.